Power, a very important component of mining, and the mining industry has complained about the excessive increase in the cost of power, the cost of electricity in South Africa in the recent years. I had a conversation around power and the direction of travel that cost of capital in terms of power would be taken now that there has been a regulation to increase the level of private generation or enable more producers to generate their power in a private capacity and hopefully at a lower cost. I had this conversation around power with Theuns Ehlers, who is the Head of Resources and Project Finance at Absa CIB.
You know, we've been coming here for the last couple of decades. This year, though, it's talk about a few different things, not just about extracting minerals from the ground, but also helping them with their power issues.
And what role is Absa looking to play in that regard when it does come to power? I mean, the mining industry constantly cries out at the fact that the cost of power is so expensive, the cost of electricity. Just let us know the space that you are looking to potentially play in helping alleviate some of those cost pressures.
Yeah, that's exactly the right question. Look, what we've seen as a trend over the last probably year or two is these miners, with legislation now starting to allow them, realizing that they can actually achieve two main objectives. The one is secure more sustainable green energy. And, you know, all our clients have objectives and ambitions to get to this net zero by a certain date. Now, procuring power from green sources basically helps them in achieving that. But the second piece, which is very exciting, is with the cost of renewable energy reducing, it's no longer becoming a grudge purchase. They can actually secure power from these IPPs at rates which are cheaper than buying from Eskom. Or if they're based somewhere else in Africa, probably cheaper than buying from those utilities. So in a way, it's a win-win for them. They achieve both their green objectives and they're securing sustainable power at a cheaper rate. Look, these technologies aren't cheap, but the payback periods have definitely come down. So that sort of eventual cost of power is definitely making it a lot easier for them to make these big investment decisions. So what we as a bank do, we're there to help them, to raise financing for this stuff, to help them also, you know, reduce their overall cost base.
Just talk to us then about what is happening with the IPPs, because we did see a government coming into the party in making the legislation a bit better, friendlier from a business point of view by raising the threshold for private generation to 100 megawatts now. Since that announcement, what kind of uptake or activity have you seen from the IPP space just based on what your lending book is doing?
Yeah, look, the deals first have to close before it gets onto the lending book. But we're currently aware of probably over 3,000 megawatts of bids out there in the market. So within a very short space of time, I think the guys have been working on this for probably the last 18, 24 months. But in the last few months, we've seen a number of serious guys coming into the market, finalizing their procurement arrangements for this, which is quite exciting. These deals don't rely on a government guarantee to backstop the obligations. So there's a lot less, if you like, red tape involved in signing up a deal between two private sector parties. And now with the sort of 100 megawatt limit being lifted to that level, it does make it easier from a regulatory perspective as well. So we've definitely seen a big increase, and that's quite good for the sector because, you know, the more the private sector can add power on the grid without going through a government channel, it relieves pressure on the system. We all know, you know, load shedding is still part of our daily lives. So if the private sector can build more capacity themselves, it helps all of us eventually.
Quite a lot has been mentioned so far about the cost of capital, and I'm interested in your view in that regard about those costs, about the direction of travel that capital will take from here on, and just what, in your view, are some of the major influencing factors to the cost of capital for Africa's mining sector right now?
Yeah, it's look, when it comes to procuring power, and I'm just going to stick to that theme for now, there's such a demand from financiers, from institutions to deploy capital in green energy that it actually, you can still attract both debt and equity capital at very good competitive rates. I can tell you on the debt side, which is where we focus, funding is available, and it's still available at very good rates. From an equity perspective, we've seen the investors in these IPPs, when it comes to looking at their models and looking at making investment decisions, these captive deals is basically attracting capital almost at the same rates as the government program. So the equity IRRs which an investor in an IPP require is basically in line with the government program, which tells you, from their perspective, still a very good, sound investment. And from our perspective, also, we see it as a good lending. It's also not only about taking a view on that initial mine who will be the off-taker. It's actually taking a view on the country and the market opening up. And eventually, in time, we all expect South Africa to have a more liberal power market, where even if your initial off-taker falls over, you should be able to actually sell to someone else, potentially still at a rate which will keep your project intact. And that for us is even more exciting. It's actually being part of this liberalization of this power market, where there's multiple IPPs selling into a market which will eventually be opening up, and not just selling to the main utility, which is Eskom. And I think the mines are realizing this, and based on that, you actually get a financing structure which is a lot more flexible, in that you don't need to sign a 20-year contract with a massive penalty to cancel. Those penalties to cancel the contracts are coming down because we're taking a view that the market will actually absorb a new player. So I think there's just so many positives at the moment happening that it makes it easier for us to lend and easier for the investors to put their money into this.
So a lot of activity happening in the renewable space, a lot of interest from banks in lending, but Africa is still dominated by coal, and it plays a very significant part of our energy mix right now. So just tell me about Absa's view towards financing coal right now, financing new projects in that space, and again, the direction of travel that will take as we're all trying to transition to net zero emissions by 2030.
Yeah, no, it's again a good one. Look, we fully appreciate that everyone has got a big focus at the moment on ESG, on sustainable financing. But I think we also realize as a bank, we operate in markets, and many African markets are still very, very highly reliant on fossil fuels. And it's coal, it's oil, it's gas. So I think it would be quite irresponsible for like an African bank like ourselves to turn our backs on financing and helping clients to sort of still operate in these markets. But I think that's not really the point. You're not going to get me saying, we're not going to finance X or not that. What we actually want to do is to help our clients transition from where they are with this very fossil-heavy situation that we've got into a greener environment. Because the reality is, and we are convinced of this, that from a cost of technology perspective, it makes sense to transition to green energy. So I'm back at renewables. It's an easier discussion now. We're not going to turn our back on the fossil fuels. We can't, because otherwise we won't have the lights. So, but what we want to do is to help all of us transition to those greener past energy sources. and it's absolutely possible. So, we as Africa, we're not quite in the space of our developed counterparts in Europe or the States. So we have to do what we need to do as a continent to help us, and because growth is a big issue. We want to do more. We want to secure more job opportunities. We want to achieve economic growth, and for that, unfortunately, whether we like it or not, fossil fuels will be part of the mix, for a while.
For now, all right. Theuns, thanks so much for your time. We'll leave it there, sir. And thanks to Theuns Ehlers, who has firmly put in place Absa's position as it does pertain to green energy and the kind of investments that could be forthcoming.